I don't know why. Paulina hears me. No, I think it was okay, just you. Okay, so talking a little bit more about the projections and the historical movements of the indicator, I would like to remind you that the Bank of England's key interest rate has been at record lows for almost 7 years, and it doesn't seem to change anytime soon. So the Bank of England is likely to leave interest rates on hold at this meeting, potentially on a 9 versus 0 vote, with McCafferty dropping calls for a hike, while the policy summary is likely to be more downbeat. The dovish tone will be tempered by the impacts of low oil prices on spending and recent sterling weakness on inflation. It is also the case that sterling selling ahead of the decision will limit the scope for further losses after the announcement. Nevertheless, overall sentiment is being undermined on economic and political grounds, as sterling is vulnerable to near 7-year lows at the moment. So there will be speculation that McCafferty abandoned his call for higher rates at this month meeting, of course, with, as I said already before, 9 versus 0 votes. There is certainly little chance that anyone would be joining McCafferty in voting for an increase, given recent developments and comments. And while Federal Reserve tightening kicked off last month, banks including Goldman Sachs and JP Morgan have pushed back their forecast for the BoE hike for the fourth quarter. At the current moment, investors are even more pessimistic, pricing in almost 16 months until the next hike. Is the most since April. Let's move on. And here you can see different experts' opinions from different banks and institutions, and basically there's no need for me to highlight the Bloomberg survey summary in some specific manner, because as you can see, all the estimates stand at 0.5%, which is unchanged. So basically the number of estimates is 45. And well, okay, Eugenia, thank you for your comment here. Anyway, talking about decisions' impact on the sterling, the predominant factor will be nervousness over global growth, says Philip Shaw, chief economist at London-based Investec Securities. There's been a drop in sterling, but that's unlikely to offset completely the jitters over the downside risks, he says. And of course, last but not least, the Dukascopy community member sentiment on this vote, not on this vote, but on the impact of the news on the sterling versus the dollar. And we see that the traders went this time bullish on the matter with 61.76% versus the 38.24% bearish votes. And as always, you can see a couple of comments here. Sonia expects the bearish impact, while Bharat expects the bullish impact for the sterling this time. So as I don't have any time left, I would like to pass the floor to Michael, who will cover the technicals for you. So Michael, please go ahead.
Thank you, Kate. So for the current release of the MPC official votes, bank rate votes, we have the cable currency pair, obviously, and the negative surprise trading strategy, since there is a risk that there will be 9 votes to leave the monetary policy unchanged, and of course that the monetary policy summary will have a rather dovish statement rather than a hawkish, which could all weigh on the sterling. So the market sentiment for the British pound is strongly bullish at 62.80%, with the US dollar being bought in 46.83% of all cases, and the sterling being sold in only 35.21% of all cases. We have both in the 50 and 100 pip range the majority of pending orders to purchase the British currency. In the 50 pip range is 61.82%, and in the 100 pip range it's 55.67%. So other market participants are also mostly bullish on the cable, with Oanda having 61.44% of traders holding long positions. In daily fix has almost 3/4 of traders holding long positions, 74%. The Saxon group, however, has a sentiment close to the neutral one, as 50.73% of all positions are short. So we kind of have the cable overbought, so there's a good chance we'll see the pair go down. If we move to the market reaction table, we can see that the largest reaction for the official bank rate votes was 78 pips, and the smallest one was only 26 pips. So the approximate average reaction we could expect today is 54 pips, and based on this reaction we can set the take profit and stop loss levels accordingly, with stop loss currently located at 1.4440, quite close to the 4-hour R2, so bolstering this resistance level in case we do see some positive reports. We could see a hike towards this level, and the take profit level is located at 1.4332, kind of between the 4-hour S2 and the daily S2, so also quite a strong support. We also have a bit lower another trend line in case we do see a really strong dovish report. You can see a fall even towards this trend line, which has been supporting the cable since the beginning of the year, so that is quite a strong level to consider. And about the technical indicators, they are giving us mostly bearish signals, with neutral signals only from the 4-hour to the weekly time frames. But the three closest ones are all giving us bearish signals, so suggesting that we will see a decline in the cable. And what I would also like to mention is that in December's MPC meeting minutes, they stressed that, I'm quoting, there is no mechanical link between the UK policy and those of other central banks. The UK policy stance would be determined ultimately by the inflation outlook, end of quote. We did see some disappointment in inflation since August. It has been slower and slower, falling from 0.1% to -0.1% in the November's report. However, we did see a small rebound in the December's one, but I believe that is still not sufficient. However, we do see the cable already going slightly to the upside. So we have the Bank of England's rate decision unchanged as anticipated, and the initial reaction was only 26 pips for the time being. Let me just check the table, the other table, and I'm guessing the bank rate votes are also unchanged. Only one member voting to hike interest rates, and the rest remain unchanged. So what else? We have the asset purchasing facility also remain unchanged, and I'm guessing that the statement was slightly hawkish, as we see a bullish reaction in the pair, but unfortunately we did not see the stop loss level reached. Maybe actually that's good. The good thing, the pair has stopped at the weekly pivot, weekly S1 at 1.4408. And I believe that is all from my side, and back to you, Kate.
Thank you, Michael. Basically, guys, no need to repeat it once again. Everything is unchanged. So I hope you get the good trades on these news. Anyway, meanwhile, I would like to remind you that it's not the only webinar that we are having here. Join us definitely tomorrow for our Friday's webinar. But meanwhile, also stay with us, because right now there's going to be a webinar by Tinashe, and he will take a look at the news and events on the Forex market, as well as take a look at the daily technical levels. So meanwhile, I'm saying bye to you, and stay with us and see you next time. Bye.